Chapter 9, Question 1. Regular Company produces two lines of audio equipment. They produce headphones and speakers. And they've hired a new CEO. The CEO wants to only keep product lines that earn at least 25% markup. And so we are having to calculate the markup of the headphones and the markup of the speakers. Markup can be computed in a few different ways, and in this problem we're going to compute it as product gross profit divided by reported product cost. They give us the total manufacturing overhead of $960,000. We're going to have to allocate that overhead based on direct materials cost, and they give us different costs. They give us the materials and the labor costs for each product line, and they also give us the sales revenue of both product lines. And now we have to calculate the markup. So I'm going to set up this information in Excel. So I entered the sales revenue, direct materials, and the direct labor for both of these product lines. I'm going to calculate the totals. So we get a total of sales revenue of $4,214,800, total direct materials of $1.6 million, and total direct labor of $720,000. Now we have to allocate the overhead. I'll put in overhead on the next line. We have the total overhead of $960,000, but we have to allocate the appropriate portions to headphones and to speakers. The problem tells us that overhead is allocated based on direct materials, and so we have to calculate the percentage of overhead compared to the direct materials cost. So we're going to do $960,000 of overhead divided by $1,600,000 of direct materials, which we just calculated, and that equals 60%. For overhead for the headphones, we're going to do 60% times direct materials. So that means that overhead is $420,000 for headphones. And then for speakers, we'll do the same thing, 60% times direct materials, and that's $540,000. And again, to check our work, we can highlight these two numbers, and then at the bottom of Excel it tells us the sum, which is 960, and so we know that we allocated the correct amounts. So now that we have all of our costs, now we can figure out what our product cost is. And remember that product cost is going to include direct materials, direct labor, and overhead. So I'm going to sum up those three costs. Now we have to make sure that our sum doesn't include sales revenue, because revenue is not a cost, it's revenue. So for headphones, it's going to be $700,000 direct materials plus $480,000 direct labor plus $420,000 of overhead, and that gives us $1.6 million in product cost for headphones. And then I can drag from the bottom right corner of this cell over. So it's going to do the same calculations for speakers. And then I can calculate the total here. So now that we have our revenues and our total expenses, now we can calculate our profit. Profit is just going to be sales revenue minus product cost or expenses, and that gives us $556,800 for headphones and $378,000 for speakers. And then for the markup, remember that the question told us that markup is equal to the profit divided by the product cost. So in this case, it'll be B7 divided by B6. That gives us a number. I'm going to change it to a percentage by clicking here, and I'll add a decimal since the problem tells us to round to one decimal place. And then I'll drag it over. So we have a markup of 34.8% for headphones, but only a markup of 22.5% for speakers for an overall markup percentage of 28.5%. So for part A1, we're going to enter these two figures, 34.8% and 22.5%. Part A2 says which of the two products should be dropped, and so the answer to that is the speaker line, because that's under the 25% threshold that the new CEO wants. And then for part C, it says, regardless of the answer in A, the CFO decides to drop the speaker line. And when we drop the speaker line, our overhead goes down, but it doesn't disappear completely. It goes down by $600,000. And so it wants us to calculate the markup for this. So remember that anytime we allocate an indirect cost like overhead, there's going to be some estimating going on. So in part A, we estimated that overhead allocated to headphones should be $420,000. In this case, in part B, it says it's actually $600,000. So now let's recalculate our markup with the speaker line gone and with the adjusted overhead amount. So what I'm going to do is I'm going to copy what we did at the top and paste it at the bottom, and then edit my spreadsheet accordingly. So for part B, we're dropping the speaker line, so I'm going to delete that column. And so now we only have the headphones column. Our sales revenue, direct materials, and direct labor for the headphones are going to be the same. Our overhead is changed to $600,000. Now our product cost is $1,780,000. Our profit is $376,800, and that drops our markup to 21.2%. So you compare that to our markup for A, it was 34.8. We dropped the unprofitable or the insufficiently profitable line of the speakers, but surprisingly, it drops our overall markup percentage to an even lower amount. And so this shows how sometimes we can do a quick and dirty analysis. We identify a product line that might not be very profitable, and then we want to drop it. But oftentimes there's a lot of underlying connections that we don't necessarily realize off the top. So what happened here? Our sales revenue, materials, and labor were all the same, but the overhead was different. The overhead didn't stay at $420,000 like it was in part A. It rose to $600,000. Now, if we were able to keep overhead the same, then yeah, our markup percentage would have been the same, and so our overall markup percentage for the company would be 34.8%. But again, a lot of times when we make a decision like cutting a product line, it's going to affect other costs indirectly, and it did so in part B. So our overhead rose to $600,000, and so our overall markup fell as well. For question 2, I'm going to let you guys do that on your own. It's very similar to question 1. Now, there is one extra tiny step to do here. Instead of giving us totals for revenue and materials and labor, they give us the cost or the revenue per model, per unit, and so we have to multiply it out. So for overall total sales revenue for the starter, we have to do $310 times 12,000 units. And then we have to do that for direct materials and direct labor as well. Also, for the overhead, it says that overhead is allocated based on direct labor cost. So we're going to have to calculate the direct labor cost by doing $100 times the 12,000 units, and then add 125 times the 4,000 units to be able to calculate the percentage to use to multiply with direct labor cost. But everything else is the same, so I'll let you guys do that on your own. Question 3. West State Furniture manufactures desks and desk chairs. They're in two different departments. The West Department produces the desks, and the State Department produces the chairs. And they allocate overhead using a plant-wide allocation. So that's pretty much the type of allocation that we've been doing in prior questions, where we just say we're going to allocate, let's say, 60% of direct labor cost as overhead. And that's actually what they're doing here. Using direct materials cost, they're going to apply a rate of 60% to calculate overhead. And so we have to calculate the profit or loss for each product using plant-wide allocation for Part A. And then for Part B, the new CFO decides that a plant-wide 60% allocation might not be that accurate. So they're going to recrunch the numbers. They're going to allocate to the West Department. They're going to use 33% of direct materials cost. And in the State Department, they're going to do 102% of direct materials cost. So we're going to also crunch the numbers that way. So I'm going to use my Excel spreadsheet again and input the numbers that are given to us in the fact pattern. And then we're going to calculate the overhead amounts. Remember, the rate is going to be 60%, so that's going to be 0.6 times the direct materials cost. So for the desks, that's going to be 0.6 times 385,000. And for the chairs, it's going to be 0.6 times 247,500. And then so our product cost, which is our total expenses, is calculated. And then our profit is just going to be the sales revenue minus the product cost. So for Part A, using a plant-wide allocation of overhead, desks have a profit of $154,000 and chairs have a profit of $301,500. Now again, for Part B, they don't like the way that Part A allocated the overhead, so they're going to allocate it based on different percentages per department. So let's delete the overhead amounts. And so it tells us that the West Department, which does the desks, that's going to be 33% of direct materials. So we're going to do 0.33 times the direct materials. For the other department, it's 102% times direct materials. And so Excel recalculates the profit for us. And so for Part B, the profit for desks is $257,950, and for chairs, it's $197,550. So it's a pretty simple problem to figure out once you set up your Excel spreadsheets. Question 4. This question is a little bit tricky, so I'm going to start it off for you, but once we do the first part, then I'll let you do the rest on your own. So for question 4, it says that this company manufactures travel bags and accessories. They use canvas, nylon, or leather. They use a plant-wide allocation rate based on direct labor hours, and the rate is $5 per labor hour, and the direct labor is $25 per hour. So it's giving us hourly rates, but it doesn't give us the actual cost. And so we have to do a little bit of calculations. So I'm going to do canvas for you guys. We're going to have to calculate the total unit cost of each backpack model. And so let's work on canvas. So for canvas, we know that our direct materials is $20 per unit, and our direct labor is $37.50. And overhead is going to be applied at $5 per labor hour. So this is tricky because we don't know the labor hours just yet. We know the labor cost, which is $37.50, but then we have to convert. So if the cost is $37.50, and then we know that labor is $25 per hour, we do $37.50 divided by $25, and that gives us 1.5 hours. Then we can take the 1.5 hours times the $5 per labor hour to get $7.50. So our overhead cost for canvas is $7.50. Then we just have to add up these three costs and we get $65 for total unit cost. All right, so for the other two, you can do on your own. Again, you just have to convert the direct labor cost given to you into hours, and then you multiply that by 5 to get your overhead cost. And then for part B, you can do that on your own. You're just calculating overhead allocation based on different things. Remember, in the prior question, we allocated overhead using different percentages for the two departments. In this case, we're using different allocation bases. So for Department 1, you're going to allocate based on labor hours, and then for Department 2, you're going to allocate based on machine hours. So different bases, but the same concept as the prior question. And then part C, you're calculating the unit cost of each month. Question 5. We're doing more overhead allocations, but in this case, we are adding a third allocation. So instead of doing two different departments or two different types of overhead allocations, now we're doing 3. Asbury Coffee Enterprises manufactures personal and commercial coffee grinders. It says that they allocate overhead based on direct labor costs, which total $1.902 million. Management has looked at that $1.902 million and determined that those overhead costs can be segregated a little bit deeper. $900,000 of that can be allocated based on production runs. $780,000 can be allocated based on quality tests, and then $222,000 can be allocated based on shipping orders processed. So those 3 numbers still total the $1.902 million, but they're allocated a little bit more precisely. And so what we need to do is calculate the rates of allocation. So the first one is the production runs. We have $900,000 of production run costs, and we're going to divide that by the number of runs. So that'll give us $12,000 per production run. Next are the quality tests. We do $780,000 divided by a total of 40 quality tests, and that gives us $19,500 per test. And then for shipping orders, $222,000 of cost divided by 200 total shipping orders equals $1,110 per shipping order. These are the rates that we're going to use to calculate the unit cost. So for the personal grinder, our direct materials is $1,437,000. For the commercial grinder, it's $517,500. And then we put in our amounts for direct labor that they give us. And then we calculate our overhead costs. For the personal grinder, we're going to do 3 different allocations. For the personal grinder, remember we're doing $12,000 per run times 50 runs. That gives us $600,000. For the commercial grinder, we're doing 12,000 times 25 runs, and we get 300,000. And then we add those two numbers up to make sure that we did it right. The total is 900,000, and that's the amount of cost for the production runs given to us in the fact pattern, so that's correct. For quality tests, we calculated that it was going to be $19,500 per test. Personal line had 15 tests. That gives us $292,500. The commercial line had 25 tests. So that gives us $487,500. And for shipping orders, our rate is $1,110 per shipping order. For the personal grinders, we had 150 shipments. For the commercial grinder, we had 50 shipments. give us 166,500 and 55,500. So our total overhead, we're going to add up these three overhead numbers. So that gives us 1,059,000 for personal and 843,000 for commercial. So we're going to plug in those two numbers into our answer for part A. And also for part A, they want to know the total cost per unit. So what we can do is we can do total cost, direct materials plus direct labor plus our overhead. And now that we have our totals, we can take our totals and divide it by the number of units. And the fact pattern tells us that we produced 30,000 personal grinders and 10,000 commercial grinders. So for personal, we're going to do the 3,516,000, divide that by 30,000. And for the commercial, we'll take that total divided by 10,000. So that gives us $117.20 for personal and $192.55 for commercial. So that's part A. For part B, it's actually going to be a little bit easier. Instead of doing 3 allocations of overhead, we're just going to do the 1 allocation rate, which is based on direct labor cost. So you just have to calculate that rate. You take your total overhead of 1.902 million, divide that by total direct labor cost of 1,585,000, and you get a rate of 120%. So when you do those calculations, you find out what your direct labor cost is, multiply that by 120%, and then you get your overhead allocation. So it's the same as what we've been doing in the prior questions. Number 6, it's almost identical to question number 5, so I'm going to let you guys do that on your own. Question number 7. We have a large retail company that has brick and mortar outlets, and they also have an online division. The question tells us that they have an HR department, which is typical of large businesses. The total cost for HR is $9 million. That $9 million is split into $3.9 million for employee maintenance. Employee maintenance is like payroll administration and benefits. And then $5,060,000 is from turnover costs. That's the cost of hiring and terminating employees. Those two costs total $9 million. The question tells us that we allocate the costs based on the average number of employees. So we have $9 million HR costs allocated over 20,000 average employees. So that's $9 million total HR costs divided by 20,000 average employees. And that gives us $450 per employee. So for part A, it says to allocate these costs between the retail and online divisions. For retail, out of those 20,000 average employees, retail has 18,000 of those. So 18,000 times $450, that's $8.1 million. And for online, it's $450 times 2,000 average employees for $900,000. So for part A, those are your figures. Now for part B, they want to allocate a little bit differently. They want to allocate based on employee maintenance and turnover. The reason being is that since the retail division has vastly more employees, and they should also be allocated more of the employee maintenance costs. And then for turnover, the online division has higher turnover, so that division should be allocated more of the turnover costs. So we have to calculate these rates. So for employee maintenance, total cost is $3,940,000. We're going to divide that by 20,000 average employees. because every employee is going to have certain maintenance costs like payroll. We get $197 per employee. And for turnover, we do 5,060,000 divided not over the 20,000 total employees, but over 2,200 employees that were hired and fired in the current year. And that gives us 2,300 per employee. So to allocate these costs, for employee maintenance for retail, we're going to do the $197 rate that we calculated times the number of employees in retail. And the question tells us that was 18,000 for a cost of 3,546,000 allocated to retail. And for online, we had an average of 2,000 employees. Give us 394,000. We calculate the total, and so we're allocating a total of 3,940,000, which is what we're supposed to do. And then for turnover, we'll do the same thing. We calculated a rate of $2,300. The question tells us that the retail division had about 720 employees that were hired or fired. That's 1,656,000. And the online division had 1,480 employees that were either hired or fired, for a total of 3,404,000. And so we total those two figures, and we get 5,060,000. If we add up those two totals, there's our 9 million in overhead that we needed to allocate. So that's question 7. Question 8 is similar to question 7, so you can do that on your own. Question 9, we're dealing with a food distributor. There's two different divisions, purchasing and distribution. The purchasing department orders the goods, receives them, then moves them to the appropriate location in the warehouse. The distribution department takes the orders from the retailers, picks the products from the warehouse, and packages the orders. The company tries to fill the order every day. So when you make an order, they're going to fill it that same day if they can. Sometimes they can't. Sometimes if they're out of a particular item, what they'll do is they'll ship the partial order now, and then they'll ship the rest of the order when the item is back in stock. So that's something similar to what Amazon does. A lot of times if you order multiple items, they're going to come in separate packages anyway. So sometimes you're going to have a certain amount of orders, but the number of shipments aren't going to line up exactly, because sometimes these orders are split into 2 or 3. And sometimes you have an order but not a shipment, because it says here that an order won't have to be packaged if the customer takes delivery at the loading dock. So it's not quite as straightforward as looking at the number of orders and matching that up to the number of shipments. The company has 20 employees. These employees work 40 hours a week for 50 weeks. So it looks like they get 2 weeks vacation. They allow the employees to have 18% of their time for training and other administrative tasks. So the other 82% they must be working. The total cost of distribution are $885,600. It says that the time for each activity is 8 minutes for taking orders, 12 minutes for picking orders, and 15 minutes for packaging orders. And in the last year, they received 42,000 orders, but the pickers had to pick 49,000 orders, and only 39,500 orders were packaged. So remember, you might have to pick multiple orders if an order gets split into 2 because maybe one item was out at the moment. And then also, there are fewer orders that were packaged because sometimes a customer might just pick up the item from the loading dock rather than having it shipped. So for part A, it says, what is the cost per minute for activities in distribution? So first we have to figure out how many minutes are we dealing with. So to do that, we take our 20 employees times the 40 hours that they work per week times 50 weeks times 60 minutes per hour, and that gives us 2,400,000 minutes. Remember that the fact pattern says that 18% of our time is going to be for training and other administrative tasks. So we're not doing during that 18%. So we don't really have 2,400,000 minutes of work at our disposal. We have 2,400,000 minutes times 1 minus 0.18, which gives us 1,968,000 minutes. Then we take our total cost of distribution that they tell us, which is 885,600, divide that by 1,968,000 minutes, and we get 45 cents per minute. The answer to A is 45 cents per minute. For part B, we have to calculate the cost of an order that requires all three activities. So if we have an order that needs to be taken, that will be 8 minutes times 45 cents per minute. For the picking activity, that'll be the 45 cents per minute times 12 minutes. And for the packaging activity, that'll be the 45 cents times 15 minutes. And so we add those three amounts together, and we get $15.75 as the cost of an order that requires all three activities. For C, it says how many minutes of unused capacity did we have for the year. So for this one, it will be good to set up our Excel work paper. We have three activities: taking orders, picking orders, and packaging orders. So it's 8 minutes for taking an order, 12 minutes for picking an order, and 15 minutes for packing an order. Fact pattern tells us that we had 42,000 orders taken, 49,000 orders picked, and 39,500 orders packaged. So we multiply the minutes per order times the number of orders to get the total minutes used. And so we do that for all three columns. And so our total minutes is 1,516,500 minutes. Remember that we had a total of 1,968,000 minutes available. And so the difference between that is the minutes available minus the minutes used of 451,500 minutes that were not used. So that's our answer for part C. And then for part D, you just multiply that 451,500 times the 45 cents. And so the cost of those unused minutes is $203,175. So that's question 9. And then questions 10 and 11 are going to be similar to what we've already done. So I'm going to let you guys do 10 and 11 on your own. So that'll be the end of the homework for chapter 9.